Hey everybody, it's Tuesday, OCTA Day, and this video actually had a different title, and it was blocked and censored on X and probably on YouTube too, so hope some people turn up. Anyway, thank you as well to the mods in the chats. Let's talk about some crazy statistics that are happening right now in different parts of the world, both from a macro perspective, also from a crypto perspective. And we are creeping back. Market's coming back, which is good. Crypto market cap is back over 2 trillion nicely. And Bitcoin, as we speak, let me see, it was still moving up the charts all day, although we were beaten down badly, but it's rebounding very nicely, as is Solana, as is Tesla. Bitcoin's now above 57.5 and a long way to go. Back to the roof of 73.8, but we're back up to what I used to call the floor, which is very good. We're still off the 200-day moving average, but not too bad. But let's get into it. And a lot to cover. Oh, fear and greed is back to 33, which is also a positive sign, which means people are getting a little more confident in getting back into the market. So let's go. 46 nuggets. And the first one is, this is not financial advice. And shout out to Patreon as well from Dashel Rodriguez. Signed up for Patreon yesterday. Great to have done it. The best content is there. Thank you so much for being part of the team. Let's go. Start with the ugly news today. And as usual, we'll start with unlocks, the big ones for the week. Aptos is on there. $70 million unlock. IO, 4.8 million. Small, but it's a small cap. Other small ones, I highlight the ones that are big. Cyber is always there. Render is new, but it's only a 0.19% unlock, 3.9 million, which is a nothing burger. Fort is there, bigger, 300,000 is actually very small, but it must be a small name. But it's always on this list. So is Stark, 3.6% unlock, that's big. NIM, small. ENA, that's always there every single week, 3.41 million. It'll rain down tokens to the end of time. And Arbitrum, $50 million unlock as well. So be careful out there, ladies and gentlemen. Now, that was the end of the ugly news, which is good. Last week, there was a preponderance of it. Today, the bad news is digital asset investment products did have significant outflows last week. This chart is always from last week, and we share it on Tuesdays from the team at CoinShares. Now, you can see that this big dip here, you'll notice something that on March 11th, or week 11, I don't think it was March 11, but on week 11, we had the exact same level of dip, record outflow set this year. So March was ugly. March, the sell-off happened right after we hit the top. And then we just had another bad one as well last week. But in more bad news, a lot of people are expecting September to be really bad. But this is cool from Charlie Bilello to give people hope. September is only a poop show 44% of the time. Not too bad, but it is typically the worst month of the year, not only for stock market, but also for crypto. We may have had that early dip already because here we are, 10th of September. Things are looking very strong, but we know what's coming. Rate cut in like 6 days or so. It's going to be big. And let's look at the stock market as well over the last 7 days since I did this last year. You can see two big bright spots, Oracle and Tesla. They had a great week. You can see the bright green. Amazon up 2.38%, and the rest of the stuff kind of down, rest of tech down. So looks like Oracle and Tesla are getting stronger. Now, I think Amazon 2%, yes, I said that. What is interesting, though, is Oracle are going big into the AI space as well. Oracle, Larry Ellison, is also a very big friend of Elon Musk, and they are doing stuff around data centers as well. And Larry Ellison is also a very big shareholder of Tesla, too. All of this stuff is connected. Connective tissue everywhere in AI. And this was part of the first part of the kind of frenzy. I used a different term before, but this is kind of a staggering statistic, and I'm sorry to everybody out there in Europe. I know a lot of people watch this from Europe, but there's been a big news that hit in the last 24 hours. That is ECB president, European Central Bank President Mario Draghi, called on the EU to invest as much as 800 billion, called that $1 trillion US, to make the European Union more competitive and commit to the regular issuance of common bonds to compete with China and the United States. Draghi said we are falling way behind and we need to boost investment by about 5 percentage points of the Eurozone's GDP. And that would be amount of spending that we have not seen since, well, World War II, pretty much. Now, Draghi also pitched the adoption of the EU's competition policy, so it does not become a barrier to the bloc's industrial goals. This is huge. So if you look at this chart, GDP for US is up 35 trillion. GDP for China is growing up 25 trillion. And you see that tipping point that just happened where China has overcome the European Union, and European Union is not growing. India is growing. So if you think of the world as a zero-sum game, of course GDP has to grow because money will grow, money printing will happen, money will be debased. But at the same time, it's these major zones competing against each other, and Europe feels like it's falling behind. So shout out to Mario Draghi. I don't know him personally, but he sees the future. So he's pretty shrewd. And of course, this is from Zero Hedge. A historic frenzy of EU debt incoming. The former ECB head says unless Europe invests, again, that huge amount we mentioned, it will be double the size of the Marshall Plan. In other words, Europe is about to unleash a historic orgy of debt. I had to say that word carefully because that was the term I used on the thumbnail and it got blocked on Twitter. So anyway, we'll see. We'll see what happens. But this could be great. And of course, the way all these countries work, if one prints and debases, the others do it too. So it becomes like a nuclear arms race to print as much fiat as you can to make yourself competitive. It's going to be fun to watch because we are in hard assets, so we like this. Again, but just do not hold that melting ice cube fiat. Shout out to the team that helped me put this long-term vision into play. There's over 8,000 people have completed their investor profiler. It's a free thing, but it helps you identify who you are, which legend investor you are like, and what your blind spot is. Remember, the most important thing, as Ray Dalio always said, is identify your blind spot. Fix it. That's key. Now, good news. Woohoo! Got through the bad and the ugly pretty quick. First of all, the crypto market cap market over the last 7 days. Thank you, Yunka. You can see here. And Yunka, it's your 10th super on a live stream. I just saw that pop up. Well, but you can see in terms of Bitcoin terms, ETH beat Bitcoin, Sol beat Bitcoin, XRP beat Bitcoin, Ton, Doge, a lot of things did, except for Binance, Tron, Avalanche, Polkadot, Leo. So all in all, not a bad week. Let's look at dollar terms. You see here a lot of green across the board. Bitcoin, despite people were losing their minds last week, but most of the damage was done about 8 days ago. But we're up from 7 days ago, which is not bad at all. Again, everything up, creeping up slowly, and sometimes it'll happen fast. Fear and greed also creeping up slowly, back to 33. We fell down to 20, low 20s for a couple of days there, and now we're back up. Now let's get into some Bitcoin stuff right now and find out what's happening in the Bitcoin world. Well, this is a chart here that shows you, it's from CryptoQuant, and it shows you how, you can call it shifting hands, the flow from the weak hands to the strong holders. So if you look carefully, you'll see increased accumulation by long-term holders will actually help lead to price stabilization and position the market for a potential rebound. The short-term holder sell-offs, yes, they created some downward pressure, but they are pretty much done. And now the long-term holders are back in control. That is the green spike there, the positive daily difference over the last 30 days moving average. And you can see that we had some heavy selling from that March, April, May time. And since then, the long-term holders have been growing. This is another view of how long-term holders are key to price stability. Again, from CryptoQuant. And you can see here that long-term holders are more in control before. Although this chart's a little hard to read, focus your eye on the kind of beigey, creamy color. Short-term holders have fallen to only about 17.5% of the total amount right now. It was higher before, and that's another view of the blue. Even though the axis on the right only goes down as low as 70%, Now, 83% of the holders for Bitcoin are long-term holders. That means more than 155 days. So basically, we're at the point of seller exhaustion, which is good. Now let's look at the drawdown history from bull markets. This is another cool chart from CryptoQuant, but the secret gnome is BlackRock, according to Axel. And the fact that we haven't had major dips like previous cycles is exciting, because every time there is a dip, every time we fall below 58K, the whales come in and they buy, because they know 58K is a very good price. It was also something I discussed briefly yesterday on DCA. If you imagine 40% debasement since 2020 of the US dollar, imagine Bitcoin is at $100,000 in today's dollars. That's only $60,000 in 2020 terms. So in real terms, we haven't actually hit the all-time high yet because of dollar debasement. So the price is still extremely compelling, and the whales know this at 58K. I need to put together a graphic to illustrate that better and show how debasement erodes the actual top price. But anyway, you can see here, no major dips. We hit that level of around 27% drawdown. But if we look at the last cycle, the 2018 to 2021, we had monster drawdowns in a bull market, down as low as 60%, down as 52%. I mean, crazy. And this time it's tepid, because now we have major buyers, because it is a bona fide asset class. And that means there is that secret gnome or secret bunch of whales buying the dip button. And if there's no dip, it means there's no demand. So it's as if, we're not sure, but ever since March, dips are being bought, but then they're quickly being sold. Once we get to 67, 70K, they're being sold off again. So we'll see if we get to a stage where that will change going forward. Maybe rate cuts, more money printing will definitely help that case too. And this is James Van Straten versus Axel. And they were bullish on negative funding rates. And we've been talking about negative funding rates a lot on this channel for a long time. JVS says, usually a bullish sign when funding rate turns negative. Axel says, that's right. In a bull market, it's a bullish alert. And Dan K2, what outcome do you expect along short term? And Axel thinks, I think the market will make a decision in the next couple of weeks. Next 2 weeks, that means before the end of September. I don't expect a major drop unless a black swan event occurs. After that, we rise higher and test 70K. Woohoo. So that's it. These are folks that are very much in the know. And that means we could hit, according to them, 70K in 2 weeks or so before the end of the month. And remember, risk happens fast. This is a quick view of the funding rates. They are at baseline right now. It's remained bullish for 381 days, but the bulls have been dominating the futures markets over, and you can see now a tiny slither of an orange bar has appeared. You can't even see it because it's so small on the right-hand side, but that means there are now more bears than bulls. And I think we won't have to wait long for the outcome, i.e. in a bull market, they will typically get squeezed, which is good. And Bitcoin miners, I'll have a miner video update coming soon, but miners are, of course, critical to the Bitcoin network because they are the primary production source for new coins. But miners' hashing power has gone to the moon. This makes mining exceptionally challenging right now, and that is, they don't have any control over the input cost of energy nor the output cost of Bitcoin, i.e. they don't really influence the price unless they're dumping a whole bunch of Bitcoin, and they have no control over the hash rate. It all depends on how many people are plugging their rigs in and how efficient those rigs are. But despite choppy and uncertain market conditions, miners have continued to install new ASIC hardware, pushing the overall hash rate 14-day moving average reaching 666.4 exahash. And that's just now 1% shy of the all-time high, which we hit last week, which is craziness. So you can see those miners that we've always stressed that have old rigs, not going to make it. Everybody, it's the arms race is for the newest, most efficient and effective rigs out there. They're the ones that will survive. Also, miners are no longer net sellers, which is also a bullish sign. Mining is, of course, highly competitive and capital intensive. And normally, miners, some of them are still, but most of them are not. They're pivoting to a HODL position because they're not selling their Bitcoin to cover expenses. Some of them are issuing new debt. Some of them are raising money by selling shares. And this pro-cyclical behavior, selling during downturns and holding in uptrends, combined with the rising hash rate and difficulty, is driving up Bitcoin production costs, potentially impacting miner profitability soon. So we'll watch this carefully. Those that are on the lifeline will have to sell their bags as quickly as they mint them. And many are, more than half of the miners are doing that, but some of the biggest miners are hodling hard, like Marathon, who are even going out and buying Bitcoin as well, which is crazy. So watch this space. And this is a cool little chart as well. Shout out to Sanjay for sharing. But this is the iPhone cost in Bitcoin terms. I thought it was hilarious. If you look at the different models, iPhone 4S, I don't even remember when that was out. Maybe 10 years ago. It was 162 Bitcoin in 2011. I can see the number now. And you can see how the price of an iPhone has fallen. Now it's at 0.014 Bitcoin per iPhone. Imagine that. In the year 2020, it was 0.05 Bitcoin. So it's come down a lot, an awful lot in a short period of time. And I did analysis a few weeks ago of the cost of a house in the United States in Bitcoin terms, and that's a staggering chart. I'll refresh that again because I created a live chart that tracks it for me automatically. Also, Michael Saylor shocks CNBS on TV, and we've heard him. Those of us who watch the Bitcoin conference know about the $13 million target about 15 to 20 years from now. But he said, Michael Saylor did, Bitcoin will become 7% of all capital in the world and hit $13 million. And the folks on CNBS were like, huh? But the conviction that Michael Saylor has is what's impressive. Because I wasn't holding any punches. Like, this is what's going to happen. And the CNBS folks didn't know how to react. Anyhow, that's it. He also spoke about the fact that MicroStrategy is the top performing stock in the S&P 500, even though it's not in the S&P 500 yet, although it's ranked number 300. And it outperformed even NVIDIA since they employed the Bitcoin strategy in August 2020. Time flies and you're having fun. Now, Bitcoin season, here we are. We have gone up from 18 last week to 27 today. Not bad, making some moves, but Bitcoin is still not doing too well over the last 90 days, down 18.5%. Other names are down a lot more, many down 50% over the last 90 days, getting completely smashed. Some of the names there are Cosmos, Arbitrum, Hedera, etc. Not doing very well. Solana is down 14% versus Bitcoin 18.5%. So Solana's not doing as bad as Bitcoin, but still it's been bad. But the real winner of the day is HNT, up 110% over the last 90 days. Aave, 53% over the last 90 days. And Tron, 28% over the last 90 days. Those three have really shaken things up, which is kind of impressive. Let's try figure out why. What's going on with Helium? Well, we always track the hottest sectors of the month. And for the last few months, it's been DePIN. DePIN. Well, everything else is getting smashed. DePIN was winning. But you can see here over the last month, Bitcoin is only down 3.4%. Ethereum down 8.7%. Again, this is exactly the last 30 days. Not the last 90 days, but for the last month now, NFT applications are coming back. So NFTs might be alive again, and we're seeing that happening. And let's talk about HNT for a while. What's going on with that? And that is a DePIN on Solana for mobile communications. And HNT is up 175% over the last 55 days. Absolutely defying the summer slump. And what's going on? This is crazy adoption that we can see here. And this is just also over the last month as well. It doesn't look that impressive, but the amount of network usage is going to the moon really fast. And it's very early days yet. At the beginning of this year, there was pretty much nobody using Helium. Now, a lot of people are. So that another use case for crypto of moving to decentralized physical infrastructure networks for real world use cases. Very, very impressive. And now the market's seeing it too in the performance of this chart, defying everything else. But we are still early in crypto adoption. And that's what I want to stress during this video today. Now let's get to the money. Follow the money. Despite the fact we had Bitcoin down and digital assets down hard for the last week. There's one puppy again that defied the trend, and that was Solana, up $6.2 million, only to come number second to short Bitcoin, $3.9 million. Bitcoin saw outflows of $643 million, second worst week since March. And short Bitcoin, you can see there I just mentioned, and Ethereum down $100 million, which is pretty much all from the Grayscale Ethereum Trust. I did warn you way before this ETH ETF was even published or made available. I said, it's just going to bleed out like Grayscale. Bleed out, bleed out, bleed out. And that's exactly what it's been doing. But let's talk about why. There's one chain that is really breaking the trend, defying them all. We have yet another new all-time high. We had 2 weeks ago 3.6 million users, daily active users in Solana, all-time high. Last week 4.5 million. This week 5.4 million. It is getting pretty bonkers out there. Tron is number 2 at 2.1 million. Base number 3 at 1.1 million. And you can see, I think Cardano stopped reporting somehow because that doesn't show up on my data dashboard anymore. And they can do that, by the way. It's good to be kind of maybe sometimes covert. Ton, 850,000. Binance, 913,000. Ethereum, 363,000. Ethereum hasn't gone anywhere but down in terms of adoption for the last 12 months. And why is that? Well, we'll get to that. First of all, people are using a different chain. And this is Mert, friend of the channel. He's trolling Ethereum because I think Vitalik Buterin used to refer to Ethereum as the world computer on many occasions. Now Mert is saying Solana will be the world computer. And if you look at this chart, kind of maybe hard to argue. But there is other stuff happening out there that we need to look at. First of all, let's look at Ethereum. There has been no net positive demand for the Ethereum ETF so far. A lot of people thought it's going to be great. The ETH maxis were jumping up and down, screaming in glee and happiness, and I wonder what they're saying these days. Anywho, but the demand for the ETFs has been, as you can see, non-existent. And massive negative outflows, which are actually accelerating. And that is kind of disappointing. So again, the point we're trying to mention here is this Grayscale ETH product is the same problem we had with the GBTC Grayscale Bitcoin Trust product. Again, it has not been counterbalanced by inflow demand across other instruments. Just net outflow like we anticipated. And that's where we are. And that's put a lot of downward price pressure on Ethereum as well. And other stuff that's happening on the Ethereum side is VanEck, or Shuttering ETH Futures ETF. VanEck will close and liquidate its Ethereum Futures ETF, EFUT. So that's another kind of ding for the Ethereum space. And again, I just share the news here. I'm not insulting your bags or your positions. I'm just sharing what is happening in the world with data. That's all. So don't shoot the messenger. Anyway, speaking of other crazy stuff that's happening with ETH is the L2s. And I remember when Vitalik came out, he said his focus on scaling will not be the L1, but to focus on helping the L2 scale. And I didn't like that. I think ETH needed to focus on solving their scalability problem, getting out of 15 TPS, which isn't going to cut it. Can you imagine 5.4 million users running at 15 TPS a day? You can't do it. The math doesn't work out, everybody. It's not hard to calculate. But this chart is very telling. Let me walk you through it real quick. Swiper, no swiping. Thank you for coming. But here, there is a hidden Coinbase revenue giant taking over the DeFi space, of course, after Solana, as we share the data on. And just a year ago, Coinbase launched its own Layer 2 blockchain on Ethereum, and that is called Base. Base is the blue line here. It's going to the moon. Arbitrum had its day in the sun back in June, and since then, it's been tanking off. But the monthly active users on Base is really, really very strong. Now, you can see all the others there are all shriveling away. Starknet, Blast, CK Sync, Manta, they're non-existent. And the problem is now, you have this user absorption. A single L2 can now handle 1 million users, but this generates only fees equivalent to about 15 users on Ethereum. And there's a new L2 being issued every 19 days, and they're all becoming more efficient, and more are coming all the time. And the key point is that while L2s are succeeding in scaling Ethereum's capacity, that's the win, their success does not directly translate into increased value for ETH as originally anticipated. What they are doing is the layer 2s are not only cannibalizing ETH, but they're cannibalizing themselves. And there's one clear winner, which is a private L2 from Coinbase called Base. So don't go buy a fake Base token out there. It doesn't exist. And that is the craziness that's happening. But kudos to Coinbase as well for doing this, making this step. Very, very impressive results. Let's talk about another L2, which may be a game changer. And I've been watching this one for a long time. This is called Zeus. And they are launching a thing called Apollo. They've got all these old Greek names that they like to use. And I know another chain that did that in the past. Hope it works out better for them, these guys. Anyway, ZBTC, which is Zeus Bitcoin, will become the new Bitcoin standard on Solana. And Apollo aims to unlock millions of untapped Bitcoin liquidity, enabling seamless, permissionless access to Solana's DeFi ecosystem without any KYC. And this is the Bitcoin Fi journey that will now start on Solana. This is an L2 that I can embrace. Why? Let me break it down. And I don't know if they're going to be able to pull it off, but technologically, I can't see why they can't. But let's talk about what they're trying to do first. How could that benefit Bitcoin? So first of all, it addresses, this project, Zeus, addresses several limitations of the Bitcoin network. One is dealing with the blockchain's very slow 4 to 8 transactions per second. Again, it's not going to cut it in this future world, while Solana can handle thousands of TPS. And that's going to go a lot higher in a couple of weeks when we find out what happens at breakpoint. Also, high fees. Bitcoin transaction fees can be very high, especially during peak times, whereas Solana can do it for fractions and fractions of pennies. Also, there's very, very limited DApp ecosystem. Bitcoin lacks smart contract capabilities. People would argue with that. I think it's not going to cut it. And that limits its DApp ecosystem compared to platforms like Solana. So if they can use the core currency of Bitcoin and make Bitcoin better, cheaper, faster, with a lot more functionality and product market fit, it's game over. The question is, can they deliver on the vision? I don't know. But they do have strong backing with some key VCs. And I hear people groan, oh, VCs are bad. Yeah, there'd be no Google or Microsoft or anything if it wasn't for VCs. So forget that thought, everybody. But VCs and angels are backing this, including some key players. I think Anatoly he's the founder of Solana Labs. He's behind it. Andrew Kang is behind it. Munib Ali from Stacks. Stacks is trying to do this. Now, Munib Ali is hedging his bets and he's betting on this too. OKX Ventures and a whole bunch of others. I think Animoca's in there too. Not sure. But also, during the testnet phase, they had 40,000 users testing it. So it shows you they got and they did that in 4 days. So they can pull in a lot of adoption real fast. And of course, it addresses a clear need. Bitcoin has a ton of liquidity, and it's bringing that liquidity to a high-performance blockchain. If they can pull it off, this could be super exciting. You could be able to borrow, stake, lend, trade, all that type of stuff using Bitcoin as the core. And that will solve all of the Bitcoin problems that it has right now today. We shall see. I track this very carefully. And in full disclosure, I don't own any Zeus at all. So I've been waiting. Although it fell to 16 cents last week, and I was like, almost pressing the button. Now it's 24 cents. So that's how fast things happen. And for those hoping for a big 20% tank capitulation event in the stock market, according to Goldman Sachs, stocks are unlikely to slump 20% or more as the risk of recession remains low against expected rate cuts from the Fed. Well, if you ask me, as I always say, and I'll repeat this again, we're probably already in a recession, and there are many very bad recessions happening right now. Real estate, commercial real estate, manufacturing, car sales, car industry, all getting completely hammered right now. So if you say there's no recession, that's going to be CNBS. There is definitely lots of recessions happening. And some good news too, Polaris. That was good news, by the way, not bad news, because we don't want. I wouldn't mind a 20% blue sale, but anyway, we're not going to get it. But this is great news. Polaris Dawn launches to orbit with 4 astronauts, and they are now going 3 times higher than the space station and the furthest that humans have been from Earth in over 50 years. So wish them all a safe ride. And that's amazing stuff that Elon and his team are doing at SpaceX. And another good news too, we got 2 years of Fed cuts ahead, going back to ZIRP, maybe zero interest rate policy. And the chart goes back to 89, and you can see that the amount of rate cuts and hikes in bond market we're pricing for in the subsequent 2 years. So things are going to be pretty good. So anyway, rate cuts are coming, rates are coming down, and that should help a lot of things, including risk assets. Money printing is coming. That'll help risk assets. Lots of tailwinds are coming. And that's the story for today. A big thank you to everybody as well. All of these videos, all of these slides are in a Substack. If you want the hard copy, you want to refresh yourself or listen to it when you're at the gym, podcast as well. Thank you all for coming, everybody. I hope you enjoyed I used a different term, crazy frenzy. 2 frenzies happening at the same time. Debt, money printing, debasement, and crazy crypto adoption. Super exciting time to be in early and watch this thing explode, because it's only going to get better and better over the next quarter or so. Watch. Thank you all. Thank you to mods in the chat, TNT Tesla, and Sean Donnelly, and K8, and everybody else. I'll see you all tomorrow. I might be able to squeeze in a quick Tesla video too. Lots of breaking news there as well. Thanks all. Bye-bye.